an introduction on the first slide, I've summarized the new reality again that probably the former speakers have introduced you as well. So if we move one forward on the slides, please. Exactly, is this new reality of the Anthropocene. And the term obviously was coined by Paul Crutzen to really mark a different era that we're now starting to live in. And the new reality term comes more from Herman Daly, which is an ecological economist that's been describing that a lot of the ideas for successful development and how we set up economies have emerged during a period where they had very few people, around 1 billion maybe in the 19th century. Great Britain, of course, was one of the sources of building that vision and the successful development model that Europe has been harnessing and carrying into the world as well. So few people, very low per capita consumption back then, and obviously a lot of planet. And colonizing big parts of the world was then one of the sources of feeding that model when our own spaces on the globe became too small to really deliver all the resources required or desired. And this is why it is so important to understand that certain ideas do need an update when the circumstances have totally changed. So Herman Daly called that world, or that reality, an empty world because of shortage of people and low capital consumption, lot of planet, and now we are in a full world. So basically the reverse. We have become a lot of people, which is a success story, obviously, for human development. But we also have much higher per capita consumption, which is great when it delivers on well-being, but it does have ecological footprints that we can't ignore any further because there is not much of planet left that we haven't touched as humanity. And that's exactly where that planetary emergency kicks in, because ecosystems do have a certain way that they run feedback loops and that they need to not have interrupted if they want to regenerate reliably for us. And obviously the climate is one of the examples where we can measure on the CO2 equivalents how many parts per million we shouldn't exceed in order for the stable climate that we've been used to maintain. And biodiversity is obviously something that needs to be looked at much more spatially. So how can we make sure that humans becoming a driving force of natural development or even planetary development, that's the whole idea behind the Anthropocene. So anthropos, the humans, becoming a natural force that is determining how the planet will look like in the future. So that is new, and that casts a different way and really requires a different way of looking at also successful development for people. And obviously the other chart on the right does summarize again how important the 20th century has been in that development, because we have had this uptake in a lot of the ways that people engage with the planet and a lot of the wealth that we've been generating, and thus also a lot of the well-being and thus amount of people that the planet now is carrying. And if we go to the next slide, please, we do see that this means that the environment is not something that is a soft issue any longer, but it's really something that's now understood as being a hardcore fact for human security, but also good business making. And if you swap to the next slide, please, Roland, then it's going to show the World Economic Forum's global risk reports. And I've been following those because I found it very interesting to see that over the last 10 years, since those reports have been done, the environmental issues have been moving up. And this one's the 2021. And you do see that amongst the top 10, there is 6. For me, water, obviously coming from a planetary point of view, is not necessarily only a social issue, but a very clearly environmental issue as well. So amongst the top 10, you have 6 that are actually connected with the environment. And this does change the discourse. And I mean, the Global Reset and other publications come out of the World Economic Forum do acknowledge this more and more. And obviously the financial sectors moves towards disclosing climate risks and other environmental risks. And the EU movements on taxonomies for investment, etc., are all pointing in that direction. We're just a bit too slow yet to really make it a game changer, to make sure that we can actually regenerate that environmental base of ours. And I do find it very important to see that the SDGs, the Sustainable Development Goals, have been formulated in 2015, And I mean, now in the last 2 years, it's hard to imagine to think that there actually was something like a global consensus on a good development model should really, really, really be held close, because the flip side of those, they're desirable developments for people in also doing things sustainably. And the flip side of the UN discourse, obviously, is disaster risk reduction programs. So we have to make sure that this is part and parcel of how we look at successful development, and to really understand, and I find it really sad how little it got attention, that the General Assembly of the UN this year, with many of the European countries there, have declared, yes, the next decade has to be about regeneration and restoration of ecosystems, and we have to do it in a way that is socially inclusive and puts health of humans and well-being of humans at the center of this agenda. And this is exactly why, next slide, please, Roland, I find it so important to be honest. This new reality really depends on honest accounting. And obviously the EU level has been leading the whole beyond GDP discourse that we've been talking about, but it's kind of faltered again whenever there's a financial crisis. We need to stabilize the financial system rather than transforming too much. But what we're risking with this, and I think when you look at the financial markets right now, you see that we have huge risks built in there, that there is a massive inflation of value taking place, totally disconnected from the reality of real production on the ground. And a lot of people saying, yes, we know this, but we don't think any of the central banks can correct it because everyone is worried it will collapse if we're stopping printing money, if we're stopping giving out cheap money. But obviously this does lead to very dire consequences on the ground. And we see it in price hikes in access to land. We see it in price hikes in rent. We see it really in a total change of ownership structures. And now when the discourse is only about looking at income levels and compensatory measures for people through COVID, we're really missing a hugely changing picture in the background that will hit us quite strongly when we come out of this, including what we're facing now in Germany, for example, insolvency waves amongst especially small and medium-sized enterprises, which have been the backbone of producing jobs, much higher amounts of jobs in relation to what their turnover is than the bigger corporations. So we have to make sure that we actually look at what's happening behind trying to get back to ideally a V-shaped recovery, not too much of a W-shaped recovery, and avoiding an L, obviously. But we have to understand what's in it. We really have to look at how do we incentivize that we're changing what has become a lose-lose system before. And this is a graph that I like to show because it comes out of the food area and really exposes the hidden costs of what we called successful food systems so far. It's been a report by Systemic and other cooperating universities and published, I think, in 2019, to really show why it is a lose-lose system that we've built once we start internalizing the collaterals that we do on social and environmental. And this one also particularly goes on health. When you see in the light blue column, when we look at how people and planet are hampered by the way that we're producing and distributing and using food. And when you look at the turnovers being 10 trillion, and then the costs, once you deduct it, being basically in excess of 2 trillion. So this is the invitation to say, if we get economics right, and this is where I've been writing from, because economics is so dominant in how we look at what is a good choice, what is a good business, what is good value. We have to make sure that we see clearly what is happening behind the monetary numbers, because we have to avoid running down a system like we do now when we only stare at the most valuable companies on the stock market. When you look at it, lots of them are finance and tech, but none of them are really primarily occupied with producing the things that people, being biological beings, first need. They need food, they need housing, they need, yes, a degree of mobility and communication, but a lot of the companies that we herald as the future are only if indirectly contributing to that by updating through digital appliances, through electrification, what has been the hardware of providing need satisfaction to people. So we do have to make sure that we allow for companies, and this is where I get to the next slide, please, to actually produce the things first that are most needed for people and do that in a way that is sustainable. And this is why the circularity and the whole Green Deal is so important. Not only look at turnover and how much sold. Food is another issue with food waste. As many of you know, We have to make sure that we're not unnecessarily taking out of the planet and that we're really rebuilding multiple times in cascading ways from what we've taken out of there. And this is why I think it is so important to really get a bit into decluttering the discourse. And that was part of what we've been trying to do with the Scientists for Future as well, to say we're going to immerse ourselves more in the public debate, even though that's not necessarily a scientist's typical role, but we're really trying to vet a bit what is being said. And I think it's, in particular in economics, it is so crucial not to conflate means and ends any further. We still have it that the bazooka by Olaf Scholz, our finance minister, is supposed to up GDP. But as I said before, it doesn't say anything. What does that mean for people? What kind of jobs is it going to create? And are those good jobs? And what's going to be produced through those jobs? And this is why GDP in itself, and we've started that discourse here, should not be a political goal. But it still is being portrayed as that, even though economists, when you talk to them off record in particular on the media, it seems to be quite difficult still to be saying this openly, are all agreeing, no, GDP should not be a political goal. It's one means to deliver, and this is why I find the triangle from Herman Daly so important, on the ultimate ends, which can only be human well-being. Because what is an economy for? Economy is a relationship, basically. Economics is an activity. It is people engaging with other people and with nature to maintain good lives for themselves and others. So it cannot be that what Herman Daly very clearly differentiates as intermediate ends, and intermediate means that those are the pole stars that we justify policymaking on. And still we see this when we're proposing things that will up environment or lowered environmental degradation, up social security. It has to be justified how it's going to pan out on GDP growth, how it's going to pan out on profits. And this is why we have to make sure that we're not straitjacketing ourselves by flipping means to become ends, because then we're losing the ultimate ends that an economy is actually for. And we have financial markets dictating what entrepreneurs and economic production can actually do, in which term, and at which degree of externalization of social and environmental costs, because the return on invest is the most important that has to be delivered on. And this is where we're on. And this is why the next slide is very important as well, to say that it does matter what we're putting forward as incentives, as rules, and also as measures of whether we're on the right track. And you see those three different ways of looking at forests. And obviously, how we decided to put our goal of what forestry should be delivering on, we have built incentives, we have built policy frameworks, and we have changed the planet. And when you look at the bottom left, it is wood production, which was crucial for a while, right? It was the most important thing. And now we're also looking at how can wood become more of a building material again. But it is, if you only go for wood, you end up in monocultures that are growing quickly, and you're probably going to degrade the ground that they're in. And now we've had in Brandenburg, for example, huge forest fires also because of this, because Brandenburg looks like that image in many places, because that's what's been incentivized. The meters of wood that can be produced as quickly as possible. And then obviously we have above that the REDD+ system. It is a good scheme under the Climate Protection Act to say, yes, we're going to compensate for the CO2 absorption. But if we only go for making money of that, we will end up planting a lot of trees, and it's been the Billion Trees programs, etc., that are sucking up most of the CO2, but might not necessarily fit into the ecosystems where they're being built. And then it's also a period of time when they're when they're absorbing the CO2. How long do you pay for it? Because otherwise it's just going to be chopped down, and then the CO2 is going to be released again. And this is why the third image is more what is going to be emerging when you really look at payments for ecosystem services. Ecosystem services meaning biodiversity, water circulation, maintaining the humus in the soil, fertility, etc. at the same time. So how we're incentivizing and what the goal is of what ecosystems should deliver for us is totally impacting how those ecosystems will look in the future, and whether they can deliver on all of the services in a holistic way, or whether we're going to risk moving towards one goal and one problem solving, which might cause other problems to emerge. And next slide, please. for me is then also to really, really talk about not only the economy suffering from certain measures, but to differentiate which economic actors will benefit hugely if we change the rules of the game. And why is it so important to really look at what is corporate law and what is reporting requirements? And I know that's all coming up in the Green Deal now. What is accountability? How do we really get some of the social and environmental into the core of financial accounting as well? So it can't be sideline and CSR reports anymore. And what is then the design of enterprise, and what do they really put forward? And what does that mean for investment duration, for example? A lot of the transformations we need right now will deliver a return on invest more in the midterm rather than short term. Because rebuilding, for example, soil, if you've got syntropic agriculture, it does mean that your system, the ecological system, has to reintegrate. We have disintegrated a lot of those systems. And for that to happen takes 7-8 years. In other places, that would probably be a bit similar, but in particular, if we're using ecosystem restoration as an example, it takes some time. And it doesn't mean that short-term returns will not necessarily be likely to be high, if at all there. So how do we make sure that the collaboration between financial investing, public procurement, ideally, but also funding and changing frameworks? There's a whole idea for purpose economy, new legal forms in Germany popping up to ensure this, that you're a bit less hostage to those short-term financial returns, to be able to transform your business model. And then midterm, be much more successful, in particular, if the framework conditions of policy making change. And that means you're not going to be losing in the price competition against those that are massively externalizing the environmental and social concerns, or really avoiding to pay taxes big time, which is what a lot of the very valuable corporations obviously do as well. And this is, I've used this slide a lot because I find it interesting to see how we have social entrepreneurship summits and green business summits, etc. If you flip that, because they are still minority, it does mean, again, that we have a loose system, that lots of the business that we have are not social enough, at least, are not green. So we have a brown business, a social default, because those have to mark themselves as deviating from what we call normal, but then have to prove that they can do a big contribution to the GDP as well, in order for them to gain legitimacy. So we really, really, really have to change the benchmarks against which we're measuring what is a successful solution. And if we go to the next slide, please. This is coming from transformation studies and showing why I think the window of opportunity right now is so big. Because we do need creative destruction. And that does not mean that entire companies have to go, but business models have to go. And we obviously have a huge debate on this in Germany right now, in the auto industry, because the industry has not managed to anticipate quick enough or felt too protected by government relations that it really has to change its business model in order to be a successful company in the future. Obviously, Tesla now moving into Brandenburg is upping the speed by which that's changing. But we do have to understand that we have to have some creative destruction on the ways that we've been doing things in order for the solutions today being able to serve tomorrow and build the kind of tomorrow that we want to see. And this is what's the famous S-curve. So tipping points that we have in ecosystems, or that we've learned to understand now through COVID, flatten the curve, don't go over the tipping where things get out of control, are something that you use in understanding when an opportunity is there to really change much more deeply and much more quickly some of the structures that felt sticky or almost unchangeable before. And this is where the acceleration phase is in. And quite often it does have to do with crises. Unless you have a certain degree of crisis meaning a challenge to the existing status quo, it is very hard to change a lot. But now we do see that we've had a lot of pioneering activities, for example, which you see at the bottom left. A lot of alternatives on energy, on agriculture, on better solutions, on business models. And they start forming coalitions and pooling their formative power. The discourse flipping. I really found it so exciting to get such feedback out of totally different corners from society that I wouldn't call part of the sustainability bubble all throughout this year, that felt COVID has really shown that normal was not normal. And this is why building back better for me is not even going far enough. We have to build forward. And then the change of regulation of market structuring has been anticipated, especially through the Green Deal already, and now has to happen anyway. We are changing how we're doing things on a big scale, very short term, and not very well planned right now. So how can we consciously get into the regulatory shifts? Because those are then the future stabilizers of a new system to emerge. And as you see at the very bottom, the visions and knowledge and narratives as the motivators, but also legitimizing frameworks of what is a good thing to do are crucially important. And this is why social scientists do say that culture is a hugely important element. And the way that we talk about things is hugely important. This is why I've come back to this throughout this whole presentation. We value what we measure what we value, we find legitimacy in particular discourses. We really need something like a discourse hygiene to be able to explain what we're actually aiming at and what we're not trying to get to. And this is where I would like to, well, I could give two more examples. I know I should be aiming at 20-25 minutes, but I could give an example for the Green Deal now if you'd like to. So maybe I'll just do that quickly and we can discuss it. If you flip 2 slides, that one, yeah, exactly. I think the positive notion is that system innovation really is an invitation to everyone. And this is the compass that's been developed by Club of Rome and Systemic, and it's been presented also to the IDEA unit of the president of the European Commission. And we're trying to work with this on a German level now as well, because it does show how we really have to adjust the compass. So redefine what's the purpose of an economy. Redefine natural resource use. We need to have really clear accounting. We have to have absolute goals. When you look at sustainable development strategies, we tend to have relative goals. But at one point, when we say, okay, we're to lower the amount of hectares that we're going to transform every year away from ecosystems to whatever kind of building ideas, etc., at some point, we're reaching the geographical limits of our nation. So just to say we're relatively reducing the conversion rates of land use is not necessarily stopping it where it should be stopping, because right now the science is very clear. We should stop converting, especially primary forests and other places just now, not reforesting, stop converting, redefining progress. So what is it that is the most important thing for people to come out of an economy so they also trust the institutions again? And we do avoid polarization that we've seen in the United States. I think we have a huge possibility and responsibility on the European continent because we've been more firmly into the social idea of sharing, inclusion, and there being a common responsibility for everyone to really maintain this as a future development model and fight for it. That means redefining metrics, redefining competitiveness. Competitiveness on what goal? There's been a really interesting research project called WWW for Europe that I found really well differentiated between a high road development strategy that we can be competitive on or a low ambition development strategy. It was one of the Horizon 20. Maybe it was the former program. But when you look it up, it's really well argued also from WIFO, the Economics Institute, that we have to be clear, what do we want to compete on? And redefining incentives I mentioned, redefining consumption from owning to using is one of the key aspects, obviously, of a circular economy and a sharing economy married with it. Redefining finance, I mentioned that before. It's really not helping right now, the way that we set up finance and financial markets. Redefining governance. This is, I find, so important that we really get into this whole institution approach, really go across the levels to integrate different agendas. And I think on the European level with the Green Deal and the digital strategy, that's a huge possibility to say this is our way of using the digital revolution to meet other overarching goals of the Anthropocene at the same time. And redefining leadership. I think we have had a very stark example of what leadership does not mean. And we're probably all still staring at the news until the 20th and hope that it's going to turn out into something that we can cooperate again and with. So really leadership for me means being honest at what is at stake, flagging that we have a lose-lose system right now, that we don't necessarily have all the answers yet, but we have to get going and we have to be radical in reshaping and redefining where we want to go, because that only gives us a chance to actually get there in the future. Thank you very much. And the last slide summarizes why I'm glad to talk to policymakers. If you just move to Ellen Ostrom, which is one of the leading economists for me in thinking about institutions and people's potential when we're actually looking at what is an economics system, and that it's not market laws, but actually institutionally built so we can change them as well. Thank you.